All right, we're down to 6 days. Tax day's less than a week away. And as you scramble to file your taxes, the thought of audits, well, they might be sending chills down your spine. More than a million unlucky filers have received that dreaded audit notice. But how can you avoid becoming one of them? Here with red flags you need to be aware of is Diversified Financial Consultants founder and president Dominick Tavella. Dominick, welcome back to the show. So nice to have you here. Before we delve into this, though, I want to share some news with you and get your reaction. So there's an Inspector General report out tonight, just moments ago, as a matter of fact. The IRS is taking 278 days, the better part of a year, to resolve identity theft cases. And as you know, what's going on is people are having their refunds stolen and their identity, too. And it's taking a heck of a long time to fix. And what's more, the IRS is making mistakes when they do it. Your reaction?
It's an incredibly nightmarish problem that the IRS really has themselves figured out how to resolve. And we witnessed this firsthand. I mean, it literally takes a year to resolve. And literally having clients walk into the IRS offices with a return in their hand going, this is my real return, and I didn't file the one you have on file. It is a huge problem with no solution in sight.
All right, well, we've got a long way to go on that. Let's get to the audit, because some people are getting audited this year, that's for sure. Let's just start with how likely it is that somebody will get audited.
So for the average American out there, the average taxpayer, they'll probably never see an audit. They'll probably never even hear from the IRS. If you think of a simple W-2, a mortgage statement, they're filing, that's not what the IRS is looking for. That's typically not what is an audit candidate. So the average American will never see an audit.
People are telling me, they're saying, well, Gerri, you know, this is the year to cheat, or, you know, lie at the margins or cheat a little bit. I say no, because the IRS can go back. They're not just going to look at this tax return every single year. You know, they go back and look at other years.
Well, there's no way I would ever condone anybody ever cheating. I think it's just foolish. I'm being honest about that. It's just stupid, right? When you add in the interest and the penalties when they catch you, it really becomes a losing proposition.
And they can't go back as far as
3 years. So
they say on their website 6 years. In some unusual cases, they will go back 6 years.
If they suspect fraud, they can go back theoretically
and then
forever.
You're in jail.
And no, that's dumb. There's other ways to make it.
All right, let's get to some of these audit red flags. Now, what's interesting is some of these you can control and others you can't.
Right.
If you just make a lot of money, you're in the crosshairs.
It's just silly. But if you make under $200,000 a year, you have less than a 1% chance of getting audited. If that number goes up to over $1 million, the percentage triples. If you make over $1 million, it's up to 10% probability that you can get audited. So clearly the IRS is not stupid. They go where the money is. The more you make, the more likely you're going to get audited.
Okay, so a lot of people, they use miscellaneous business expenses to get rid of a raft of issues. What do you say to that?
Look, there's a laundry list of things that the IRS looks for, and amongst the top of the list is the deductions and how are those deductions relative to your income and your job description. So if you're a plumber and you're taking trips to Tahiti for research, you're going to have a problem. So you got to keep your deductions in proportion to your income, but also in proportion to the kind of job that you do.
And, of course, if you fail to report all income. And for some people, this is easy. This can happen quite easily.
It can happen by accident, but I got to tell you, this is the one that drives me nuts. When you get a W-2 or a 1099 in the mail, it means the IRS got the exact same thing. So the idea that, oh, I'll just neglect to put this on my return, stupid, foolish thing to do.
All right, so one of the interesting things you brought up in the break, we were talking about this, is so a lot of this stuff now at the IRS is automated. They're using computers to figure out if you fall out of the averages, the parameters, what most people do. If you're totally different, say with charitable deductions, you could get audited.
Yeah, look, they've had to make up for lack of manpower and other things. So they're sending out an awful lot of letters. And those letters come in basically in two buckets. One is, hey, your numbers don't match up. You didn't report interest or you didn't report a W-2 income. But the other one is the one that was your charitable deduction appropriate? Did you document it? Do you have the proper forms? Did you take a mortgage deduction? Let me see the 1098. They actually want to see the 1098. Yep. So they're asking for documentation on things that are a little bit out of the norm, and they're doing it all by computers. The computer sends out the mail. Next thing you know, you're dialing on the phone, and good luck talking to a real person.
Get a professional. That's really, if you have to have that conversation, find someone to represent you.
The one piece of advice I give, if you get to the point where you actually have an audit, number one, don't panic. Number two, make sure your documentation is all in order, because that's really what this is about. Number three, call a professional, because it's going to cost you a lot more in the end if you don't resolve this appropriately.
Dom, So good to see you. Great job as always.
Thank you.
Thank you.